Nobody talks about this on social media. No flashy cars, no overnight millions, no secret trading strategies. Just 5 habits so boring, most people skip them completely. And yet, these are the exact habits quietly making ordinary Americans wealthy. A recent study followed 23 regular people, normal salaries, no inheritance, no luck. They built net worths between $250,000 and $1.4 million. What did they have in common? Not intelligence, not connections, just boring, consistent money habits. Let's break them down. Habit number 1, automate everything. The biggest enemy of wealth is emotion. When markets drop, emotions make you sell. When you get paid, emotions make you spend. The fix? Remove yourself from the equation completely. Set up automatic transfers the same day your paycheck arrives. Money goes straight to savings and investments before you even see it. Financial advisors say automatic contributions remove emotion and decision-making, ensuring you invest consistently without trying to time the market. Highland planning. You never miss money you never touched. Habit 2, 120 to 2. Habit number 2, keep the gap. One of the most powerful wealth-building habits is maintaining a gap between what you earn and what you spend. Highland planning. This sounds obvious, but here's where most people fail. A person earning $70,000 can feel just as financially stretched as someone earning $120,000. Medium. Why? Because spending grows with income. You get a raise, you upgrade your car, you earn more, you move to a bigger apartment. The habit? Keep your expenses flat even when your income rises. Every extra dollar goes to investments, not lifestyle upgrades. Habit 3, 2 o'clock to 2:40. Habit number 3, the rule of 72. Take the number 72 and divide it by your annual interest rate. The result tells you approximately how many years it takes for your money to double. Good banking rates. For example, investing at 10% return, 72 divided by 10 equals 7.2 years to double your money. $10,000 becomes $20,000, then $40,000, then $80,000, without adding a single extra dollar. That is compound interest, and it only works if you start early and stay patient. Habit 4, 240 to 320. Habit number 4, never miss the best days. This one is shocking. If you missed just the 5 best trading days in the market between 1988 and 2023, you would have missed 37% of all gains. Miss the best 10 days, you lose 54%. Miss the best 50 days, you lose 92% of total returns. Money guy. Those best days? They usually happen right after the biggest crashes. The people who panic and sell miss them completely. The boring habit? Stay invested, always, no matter what. Habit 5, 320 to 4. Habit number 5, reinvest every dividend. Most beginners take their dividends as cash. Big mistake. Instead of cashing out dividends, reinvest them. Compounding accelerates growth. Your money starts earning money on itself. AOL. Over 30 years, reinvested dividends can account for more than half of your total returns. One click in your brokerage account. Turn on DRIP. Dividend Reinvestment Plan. Set it. Forget it. Watch it grow. Closing. 4 o'clock to 4:40. Here's the truth nobody wants to hear. Wealth is not built in one big moment. It is built in thousands of small, boring, consistent decisions. Automate your savings. Keep the gap between earning and spending. Use the rule of 72. Never panic sell. Reinvest your dividends. Start today. Stay consistent. Think long-term. If this video helped you, hit like, subscribe, and I will see you in the next one.